Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq 100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on Nasdaq. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me this Tuesday afternoon, we have Max Cabasso, Managing Director on Nasdaq's Market Intelligence Desk, for an update on technical levels to watch in the Nasdaq 100 as we're going to that key CPI number tomorrow morning, Wednesday morning. Max, it's great to see you as always. Welcome back to Trade Talks. And I think really what the question is here, as valuations are starting to reset, is it time to, start looking at some of the values that we're seeing in the Nasdaq 100?
Thanks, Jill. Good to be back. Valuations are getting back to kind of a year ago levels, but it's when looking back, pre-pandemic levels are still elevated in some spaces. And I think some of the valuations we looked at were changing valuations. Instead of looking at companies, especially in the growth space, which we're kind of heavy on here in the Nasdaq 100, growth stocks, instead of looking at just, revenues, a lot more focus is turned to profit and free cash flow. So although some of the valuations we're seeing are getting back to kind of what we consider to be, more reasonable versus what we saw, just a few months ago, compared to a year or two ago, I think the metrics that investors are starting to look at are starting to change. So I think there's been, real focus on free cash flow and profits, which you've seen in earnings with a lot of companies, even with good earnings, good outlooks, rate a beat and raise. If that cash flow is not there, those valuations are still starting to compress. It's kind of gone sector by sector. A lot of the software as a service companies got that multiple compression to start. Now we're seeing it in more of the internet security names. They're starting to get that compression. So they're definitely becoming interesting, but it's still kind of it's a wait and see mode, obviously, with the Fed, what they're going to be doing, and if those valuation metrics are we're looking at something else versus just the revenue multiples, really.
Right. Well, I mean, Max, that's a great point that you make. Profitability does matter in markets like this when we don't have that Fed put in there. But so let's talk about that. The underlying, the undercurrents that is really revving up this volatility, the Fed, interest rates, supply chain, inflation. Most importantly, why is this CPI data so important tomorrow?
So CPI is crucial, Mark. The Fed has come out and said it, that they're focusing on it, that until they really see it cooling down and coming off, they're not going to back off, from hiking rates. Loretta Mester, one of the Fed officials, just about an hour ago, came out and said, she doesn't expect inflation to get back to that kind of 2% target for 2022 or even 2023, and they're not going to take their foot off the gas in terms of, Fed in terms of rate hikes until they see that coming down. So, Fed Chairman Powell came out, after his press conference, said 75 basis point hike was kind of off the table. They weren't thinking about it. They started to walk back that statement. They said, it's nothing is off the table if inflation isn't under control. So they're trying to guide the market, saying, okay, we're looking at 50 basis point hikes. But until they see that inflation is really starting to come down, and in particular, core inflation, obviously food and energy is something that everybody feels, but there's a lot more volatility in that. But until they see that inflation really starting to tick down, they're going to continue raising rates and offloading some of their balance sheet, each month. And again, they're really focused on that consumer demand, part of the print versus, some of the supply issues that they really can't control. And so until they see that come down, they're going to be raising rates consistently. And until that is clear that that's kind of done with, there's going to be headwinds, for the market, over the next, 6 to 12 months.
So Max, with that said, what are the technical levels that you're looking at the broader Nasdaq 100 index?
So it's not the greatest picture, but if you to the upside, we consistently, at least over the last month, have seen lower highs and lower lows. So to the upside, it's really kind of just above that 12,800 level to 13,000 is kind of the levels we saw the lows of March before we started to rally, back to the end of March, and then we kind of failed there. And obviously we know what happened in April. So the upside through that 12,800, 13,000 level. To the downside, if we don't hold here, it could be a while, but 11,000 is kind of the next real level we're looking at. That's kind of where we bottomed in September of 2020 and October of 2020 is that level. So we're kind of testing those, year, 12 months, back level. So again, 13,000 to the upside, it's kind of 1,000, point prints here, but 13 to the upside, really 11,000 just below. It's kind of where we're looking for some downside support. And again, until we start to see higher highs, it's going to be, I think those are going to be, substantial, headwinds up ahead there.
All right, Max, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.